So pwede rin pala. Meron din pala magbabayad. Meaning, good morning and welcome to this webinar organized by the FINEX Financial Inclusion Committee in partnership with the Women in Finance Committee. Allow me to mention and give acknowledgement to the driving force behind this project, That's Gay Santos, the chair, and Ayan Guevara, the liaison director of the Financial Inclusion Committee, and Terry Magleo, the chair, and Larry Concepcion, the liaison director of the Women in Finance Committee. It has been about 57 days since the government imposed the enhanced community quarantine in the National Capital Region and selected parts of the country. I guess the question foremost in our minds is whether the ECQ and complementary programs of government have been effective, and whether alternative approaches to addressing the pandemic would have been effective or would have worked as well. And this is precisely why this webinar was organized, so we can learn and hear from experts and the practices and programs adopted by other countries for pandemics that they had faced as well. Now, let me start by asking all of us to pause for a very short prayer. Almighty Father, at this time of great anxiety and gripping fear, in the face of sickness and death in our families and communities, amidst untold hunger and despair, we pray that we, your people, will bear the unendurable, grasp the imponderable, and scale the insurmountable. Because, dear Lord, we trust in your incomparable power, your everlasting love, and your infinite mercy. Amen. Let us now put our right hand over our hearts and join in the singing of the national anthem. Let me now call on the FINEX President, President Jeng Pascual, for his welcome remarks. Jeng.
Thank you very much, Malu. Good morning, FINEX members and guests. Welcome to today's webinar on Beyond Financial Inclusion, International Lessons of Experience under the Pandemic. As Malu said, this is the second part of the Beyond Financial Inclusion series, sponsored by the Financial Inclusion and Women in Finance Committees of FINEX, for the benefit of the Kaagapay program of the Philippine Disaster Resilience Foundation. We truly appreciate your donations. In the first session, we gathered insights on the salient features of the Bayanihan Act, experiences on the fight against COVID-19 in one of our cities, government efforts to address MSME challenges, an online medical consultation platform, and the importance of water and sanitation. In this morning's webinar, we will hear about lessons and experiences in dealing with a pandemic beyond our borders. Based on available statistics, I understand that Thailand and Japan have shown great advances in controlling the spread of the virus, and Africa as a continent is the second lowest in number of cases in total and lowest in average cases per country. We are therefore honored to have with us this morning a distinguished panel of speakers calling in from different time zones who will share their various experiences in dealing with response, resilience, and recovery in these geographies, and also provide external perspectives on how we are handling the situation in the Philippines and protecting jobs. I welcome Mr. Alphonse E.B. Kouagou from the World Bank, Mr. Roland Michelitsch from the African Development Bank, Mr. Julius Parreñas of Mizuho Bank, Mr. Kobsak Duangdee of the Thai Bankers Association, and Mr. Hideki Kagohashi of the International Labor Organization. They will be properly introduced by Malu shortly, and then ably moderated by our very own Gay Santos. Before I hand back to Malu, I would like to once again thank Malu, Gay, Ian, Terry, and Larry, our speakers, the Financial Inclusion and Women in Finance Committees, and the FINEX Secretariat for making this webinar possible. And of course, all of you for participating. Have an enriching webinar, and please continue to take care of yourselves and each other. Thank you.
Thank you, Jeng. As Jeng mentioned, we have with us this morning 5 speakers and the moderator who all have exceptional academic qualifications and quite impressive and extensive involvement and clear passion for development work. It's obvious to us that their hearts and their minds are in the right place. In the interest of time, we will be dispensing with lengthy introductions that our speakers and our moderator richly deserve. What we will do instead is we will be circulating to the attendees the CVs of both speakers and the moderator together, hopefully with their presentation materials after the session is over. So very briefly, let me introduce our speakers as well as our moderator. Our first speaker is Mr. Alphonse E.B. Kouagou, an international development and finance professional who currently serves as the alternate executive director, Africa Group 2. Mr. Kouagou is a certified public accountant. He holds a Bachelor of Science in Accounting degree from Marymount University and an MBA from University of Maryland. Our second speaker is Dr. Roland Michelitsch, Evaluator General at the African Development Bank Group, where he leads independent development evaluation. Dr. Michelitsch holds a PhD and MA in economics from the University of Arizona, and on top of that, an MBA from the University of Graz. Our third speaker is Dr. Julius Parreñas, Senior Advisor of Mizuho Bank Limited. Dr. Parreñas coordinates the advisory group on APEC Financial System Capacity Building, the Asia Pacific Financial Forum, the Asia Pacific Infrastructure Partnership, and the Financial Infrastructure Development Networks. Dr. Parreñas obtained his PhD magna cum laude from the Ludwig Maximilian University. Our fourth speaker is Mr. Kobsak Duangdee, Secretary General of the Thai Bankers Association. Mr. Duangdee represents Thailand in the Business Advisory Councils of APEC, ASEAN, and East Asia. Mr. Duangdee obtained his BA in Accountancy from Chulalongkorn University and his MBA from the University of Tennessee. Our fifth speaker is Mr. Hideki Kagohashi, Enterprise Development Specialist of the International Labor Organization, providing technical service for the Philippines. Mr. Kagohashi holds degrees in Master of International Affairs from Columbia University and MA International Relations from the University of Tokyo. And of course, our moderator and the lovely rose among the thorns is our very own Griselda Santos. Gay is a retiree from IFC, where she was involved in various development work. She presently holds consultancy and senior advisory positions in areas of financial inclusion and fintech. Gay holds an MBA degree from Johns Hopkins University, a certificate in internal audit from George Mason University, and Six Sigma certificate from George Washington University. So Gay, the floor is yours.
Yes, good afternoon, good morning, everyone. And it is indeed a great honor to have this panelists joining our forum. Can you see me? Hello? Yes, hi, sorry. Good morning again, everyone. It is a great honor to have this esteemed gentleman as part of this forum. That being said, in the interest of time, let's proceed with our first speaker, Mr. Alphonse Kouagou. Alphonse, maybe we can start by if you can provide a brief background of your position at the World Bank Group and how it fits into the whole governance structure of the World Bank Group for people to understand. And at the same time, you mentioned Group 2, Africa region. What is Group 2 of Africa region?
Thank you, Gay, and I'm very appreciative for being invited to join this forum. I thank you for creating awareness around what's going on around the world on the COVID-19. I think it's important the more we can communicate and share experiences from the different intervention groups that are actively trying to help the globe fight this pandemic. As I was introduced, again, I work for the World Bank. I was in IFC for 18 years before joining the World Bank's board as the alternate executive director for Africa Group 2, which regroups 23 African countries, all of the Francophone countries, plus 2 Spanish-speaking countries and 1 Portuguese country in the region. So for me, pandemic has a potential impact in my constituency countries that I represent at the bank, because they're some of the poorest countries in the world. But I have to say that I'm pleasantly surprised of how active the World Bank and the IMF has been since the beginning of this pandemic, since it was declared in Washington, DC. So I will start by talking about what at the World Bank we have been able to do and are currently doing, and also talk about what we're doing looking forward, as well as what my constituency countries need now and going forward. So from the beginning of the pandemic and sitting on the board, I have the privilege of being part of the planning and being abreast of all the actions that the World Bank was taking on almost a daily basis. So the World Bank response to the COVID was at initially an allocation of $6 billion from the World Bank Group and $8 billion from IFC, both targeting different audiences, but the same for the same cause. The $6 billion from the bank was to address the emergency needs for the poorest countries in the world. The deployment of the capital was planned in such a way that it could be delivered to help with the planning on the health issues that the countries had to face initially as the virus spread through their countries. Each country received an envelope based on their population and GDP, automatically allocated, the approval for which the board was very experienced in agreeing to the way to proceed in allocating the funds, and also the approval process, which was very efficient. To date, we have already approved such projects in over 100 countries. The funds have been disbursed to some of the countries, and others are pending disbursement and so on. So we hope to deplete the $6 billion by the end of our fiscal year, which is June 30th of 2020. In addition to those funding, most of the countries, the IDA countries, which are the poorest countries in the world, had also projects ongoing in the social sector and the health sector. Some of those projects were restructured to pull out funds from the ongoing project to direct them toward the COVID, the COVID fight. That helps most of my countries address the need for equipment, the need for restructuring for the hospitals, ensuring that they have enough funds to address and pay for any treatment required for the COVID patients, and also try to provide some cash transfers to some of the poorest families that were being affected directly by the COVID. As I've looked through the countries that I represent over the last few weeks, I've been working from home for over 2 months now. Most of those countries are facing issues. In Africa, as mentioned earlier, the spread is not as prevalent as it's been in elsewhere, but yet the economic impact is expected to be the same or worse. So going forward, what do we need? So most of the countries have highlighted that they need more concessional financing. It's estimated that they would need as much as $140 billion. And the request for, at the World Bank, we had decided to request for the debts relief, which is a debt standstill for right now is 6 months, may be extended. We're still discussing the extension of that debt relief for a year or two. And we hope this would provide liquidity in the country's budgets to quickly address the needs for COVID. Some of the countries, however, feel like the need is more of the concession financing, not so much the debt relief, because the debt relief is just a temporary relief that wouldn't require to be repaid. And they fear that this may actually, the repayment may be requested at the time that they're getting ready to launch the economic development activities post-COVID. So there is a divide in what the preference is for each of the countries in my constituency. So the World Bank is leaving it flexible for some of the countries that need the debt relief to get it, and others to basically, they don't have to take the debt relief, and they can focus on the borrowing side, and hopefully they can obtain the financing needed from the IMF and the World Bank group. There's also a requirement for the private sector to be involved. And as you know, and Gay work for IFC is providing $8 billion. And that's also divided into two phases. The first phase is trade finance, a trade finance facility that would provide liquidity through the banks. And the banks would basically finance the trade, the trade finance to companies that are in need of short-term liquidity funding. In addition to that, so that funding would be provided to the banks. In addition to that, there will be a facility that is dedicated to providing liquidity to the real sector companies that have temporarily been shut down, but when they relaunch, they would need to have the liquidity since the trade in the world and basically some of the businesses have been affected by the crisis. So IFC in total would be providing the $8 billion to cover those two pillars. The second phase of the IFC funding would be much more open. The first one would cover just the companies in which they already have an investment. The second phase would deal with the new project that they would be structuring to try to support the private sector in each of the member countries of the World Bank. The second phase for the World Bank financing, which would come from July 1, 2020, would likely provide as much as 160 billion, which would be, of which $55 billion will be allocated to finance projects in the Africa region. This funding provides much more flexibility for each country to obtain loans or concessional loans, as well as budget support financing for reforms that may be needed in order for them to be able to attract private capital after the crisis. So it's going to be a two-pronged approach, and I believe this would help these countries for a much needed relaunch of their economies going forward. So as of July 1, that funding would be available, partially coming from IDA. And IDA is planning to front load most of the capital that is usually allocated to the IDA countries in order to make sure they have the money up front. Usually the money is allocated over a 2-year period. In this case, it would be offered as much as possible within the first 6 months of the fiscal year. We hope this would expedite the restart of the economic activities in these countries, spur trade, and minimize the impact in most of these countries. As much as the World Bank is doing, the need will not be completely fulfilled. There's going to be gaps remaining. So for that, we are working with partner banks, MDBs, IFIs, and other institutions that, including the private sector, that are willing to work with the World Bank to finance, to provide the financing needs for all of our countries. Throughout the crisis, for the first time, the World Bank has to do spring meeting via conference calls, which surprisingly was very successful. And I actually found our institution to be much more efficient than before the crisis. We have been able to move and allocate funding, disburse funding, get most of the projects approved through the board much more efficiently during the crisis than we generally are. So I'm proud to say that to be working for this institution, my first 18 years from IFC, I was happy to work there, but I have never seen this institution move so quickly and so expeditiously to support these countries. I often call it looking an elephant move like a cheetah. Over the next couple of years, my role will change from alternate ED to ED. My focus will remain to fight for the 23 countries that I cover and to cover all corners of the globe to try to organize financing for the economic development for these countries and try to minimize the impact of the COVID. And I'm praying and hoping that the current rate of contagion in the region, in Africa in general, which has been relatively low, including in my own country where we have less than 300 cases, and 2 people have died. That's the Republic of Benin. I hope that remains to be the case, and we don't see an escalation, because I fear any escalation will only worsen the situation where already these countries are very poor, do not have the capacity, do not have the hospitals or the equipment to support a high level of sick people from the coronavirus. I hear the heat helps this country minimize the contagion, and I hope that continues to be the case. So I think I'm going to stop here and let you ask if anybody has questions, and I can answer those questions. But we are proactive and continue to look for ways to support our 190 or so countries in the world.
Thank you very much, Alphonse, for providing that very comprehensive work program from the World Bank down to your area of responsibility. It's comforting to know that all support are being mobilized by the World Bank Group, and it's being done proportionately based on the GDP and the population of the country, among others. I have questions, but we'll save it for later. And maybe we'll go deeper into Africa by proceeding with Roland Michelitsch from the African Work Development Bank. Roland, you can take over. Thank you.
Thank you very much, Gay, and it's really good to see 2 ex-colleagues, Gay and Alphonse. Very nice to see you. So I think Alex has already put up the presentation, so I think it's easier to run it off there. Just a little bit of background also on me. I used to be for over 20 years in IFC, the private sector arm of the World Bank. Then I was at the Inter-American Development Bank, and I'm now at the African Development Bank, leading development evaluation here. So if we can go to the second slide, please. So what do I want to cover today? The pandemic itself, how to contain it, how to mitigate treatment, and then the reopening, then lessons to date. What can we learn from the pandemic? And given my background, I'll focus also on the development banks, what we can do. And then what can different people do, the public and individuals, governments and businesses, financial intermediaries and the real sector. But let's first start with the pandemic itself. Next slide, please. So brief timeline, it started in December of 2019 in China, but then everything went very quickly. So by January 20th, which was the first time the World Health Organization actually gave out, call it the big alarm bells, there were only 4 other confirmed cases in 3 countries, Thailand, Japan, and the Republic of Korea, but then it went very quickly, like a week later already. US, Singapore, Vietnam, Malaysia were affected, and then the subsequent week also Germany and the Philippines and many European countries. One of the things I should say is the confirmed cases that many people are watching very, very closely. I consider as an evaluator a very unreliable measure because the testing differs so much among countries. What is relatively more reliable are the deaths. And so I'll talk about that, not a very nice topic, unfortunately, but that's where we have relatively more reliable data. Now, what's also a pretty good indicator is the ratio of the deaths to the confirmed cases. We know about the disease that approximately maybe 0.5% or 1% of the people who get it ultimately die from it. So it's actually, luckily, a relatively low ratio. So this is, if everyone was tested, that's what you should see. But what, because you don't have everyone tested, you have higher ratios. And the higher the ratio is, essentially, the less a country has a handle on how well or where the disease has spread. And so that's very important, and I'll get back to that. So if we go to the next slide. So here, what you can see is compared to those countries that have taken a very aggressive stance against the crisis, Philippines is unfortunately not doing so well. So, for example, Vietnam, you still have 0 deaths. Singapore, a very, very low ratio, about 20 people as of yesterday had died. Thailand also extremely low, 56. In South Korea, they had initially quite a few deaths, and I'll talk a little bit about what can contribute in a big way to such deaths, because they initially had it very well under control, and then it got a little bit out of hand, but they got it back under control. And then Philippines, but at least it's better than Indonesia. Now, don't feel too bad about the Philippines. If we go to the next slide. Here, let's first talk about the early adopters. So what do we know what works? So public information campaigns work very well. So for example, Vietnam declared the disease the enemy, and everyone has to fight it. What to do is extremely important. Hygiene, hand washing, distancing. Masks, interestingly enough, they protect mainly the others, but if everyone wears them, you can really stop the spread. Stopping passenger flight is what most countries did. Stopping large gatherings made a big difference, and then ultimately the lockdown. But that, of course, has also very bad economic effects. So just to show you a little bit about the aggressive testing, you see here how little the Philippines did, particularly in the beginning in terms of the testing. And you can't get the disease under control if you don't know who is sick. What the other countries also did very well, and I don't know the Philippines well enough, what went on there, was contact tracing. So as soon as you had a confirmed case, you would immediately look at over the last 2 weeks who was in touch with that person. So here are some of the really important measures to adopt if you want to rein in the disease. And so here on the right-hand side, you see this ratio of deaths to confirmed cases. This is not that more people die in the Philippines and Indonesia. I don't think that. It's mainly due to the fact that in the Philippines and Indonesia, you don't have sufficient testing. And so my rule of thumb when I look at it globally, if you are, say, under 4% of this ratio, you have it reasonably well under control. If you have it between 4 and 8%, you don't have a very good handle. And if it's above 8%, you essentially have no idea where the disease is. So if we can go to the next slide. Before you feel too bad about the Philippines, it's actually much, much worse in Europe. And here you can see the UK, Italy, with very high numbers of deaths already. And keep in mind that all of these countries have smaller population sizes than the US. Germany is one of the countries that handled it much better in Europe. And I didn't put the US on the scale because essentially it's off the scale and dwarfs everyone else, in part because they didn't handle the crisis well at all. So if we go to the next slides, there are still, there are many advantages that the Philippines have vis-a-vis Europe, and there are still some lessons that it can learn. So advantages is less population density, less urbanization, that really helps to have the spread not go as fast. So that also means that I'm sure in the Philippines, some areas are still much less affected and could potentially benefit from the lessons of the early adopters also. Has a much younger population, that makes a huge difference. So just to look at the population above 65, 5% in the Philippines versus 26% in Europe. Or the very young population is twice as much as in Europe. There are also other potential explanations because after all, Asia already went through the SARS crisis. I actually happened to go through Asia during the height of the SARS crisis, and I was quite well prepared then already compared to Europe, where this is relatively new. So what have we learned when we look at the real differences made in the confirmed cases and in the deaths? Also is a public events ban makes a big difference, and then the lockdown order. But that's very difficult, and particularly for poorer countries like here in Africa, it's even more difficult because whereas I can work from home, many people don't have that option. They have to go to work if they want to earn income. And if they don't go to work, essentially, they might not have enough money to feed their families. What we don't really know yet is the reopening of the economies. It's a little bit too early to say in Europe. And we'll have to watch the growth rate. So for example, Germany started to open up a little bit, and the replication rate, and I think some of the other speakers will talk about that, went above the famous 1. In other words, the disease is still spreading as opposed to diminishing. In all countries, what's really important is also to have much better information on the testing to know really about the spread of the disease. Can we go to the next slide, please? So another indicator that's really important to look at is the growth rate in deaths. So the really good news is that in the Philippines, like also globally, the death rate has come down quite a lot from about the 10% range in the first half of April to now 2 to 3% approximately. Now, unfortunately, the 2 to 3% is still too high to really stop the disease. You need to come down to, as you see here, from Thailand or South Korea to 1% or almost 0 if you really want to stop the disease. If we're going to go to the next slide. Here you can also see the Philippines, even in comparison with Europe, it's not completely under control yet in the terms of the growth rates of the deaths. Okay, let's go to the next slide. What's really, really important is not just the health effects of the disease, even though they are clearly terrible, but also the economic effects. There has been a tremendous impact from these lockdowns globally, and also, I'm sure, in the Philippines and here in Africa. The most affected areas to date have been airlines, basically completely shut down, tourism, hotel and restaurants also almost completely shut down. But we'll talk a little bit about how some of these businesses have adapted, like restaurants instead producing food for takeout. Then commodity prices are way down, most of all oil, but also other commodities, which has particularly affected Africa a lot. Export revenues are down and the global value chains have been badly affected. Fiscal balances, and it's so bad that people don't really know how will this actually restart with the huge fiscal gaps in countries. Remittances are way down. I'm sure that this also affects the Philippines very much. And then, very importantly, it's who is affected. It's mostly the poor and vulnerable. They can't afford not to work. They can't work from home. They have usually a complete lack of savings. They don't have social protection, so they don't get unemployment insurance. And that affects particularly the informal sector, the poor and women. And let's not forget also one of our hosts here is particularly, of course, focused on women's issues, as we all should be. Okay, let's go to the next slide. So, lessons learned. I'll start out with public and individuals, what they should do. So, hygiene, hand washing is extremely important, even more important than hand sanitizer, just water and soap if you have. That means also for businesses, it's really important to make hand washing available, for example, when people enter your store. That really can help to protect it also. Masks are important. Interestingly enough, most of the benefit from masks is actually protecting others as opposed to protecting yourself unless you have a really surgical mask. What you also want to do is avoid unnecessary movement. I mean, international travel for the most part has been shut down in any event, but also for individuals. So I mentioned earlier that Korea was initially doing extremely well until there came case number 31. Case number 31 was in a hospital, and they said, your symptoms don't look good, you should get tested for COVID-19. That person, a woman, said, well, but first I want to go to church. Then she went to a hotel, to a buffet lunch, and only then she went into another hospital to get tested. Within that period, she had infected one hospital, thousands of people, because it was a very large church, the people in the hotel, and the second hospital. And that case alone had more than 1,000 infected people, and ultimately also many people dying. So we need to take our responsibility really very seriously. Physical distancing, and luckily nowadays, like today, you can still socially connect with people. And what's particularly important is because the death rate is much higher among older people, particularly 50 or 60 years and above, we need to protect them. This is actually in Europe where a lot of the death occurred, either in seniors' homes or in the case of Italy, for example, which has a very high death rates. Very often the grandparents are still living with the whole big family at home. So can we go to the next slide? Okay. Next lesson is for governments in terms of health. The containment initially, if you can get that right, you can really make a huge difference. So early information and awareness campaigns, stopping large gatherings, aggressive testing and tracing, and proper information systems that allow you to really know where the disease is and where you can pinpoint the lockdowns. So for example, relatively speaking, in Korea, you had much more targeted lockdowns because they knew where the cases were through the intensive testing. Mitigation then comes next with proper protective equipment, particularly, of course, for the medical personnel. Quarantine of the people who, for example, in Austria, my home country, which is doing pretty well, quarantine even of those people suspected to have been in touch with someone with the disease. Then you want to separate, particularly in the health facilities, to make sure that they don't contaminate others. Then, in terms of treatment, trying to increase the capacity. So China is probably best known for that. Within a week, they were able to put in place a hospital in Wuhan, especially focused on COVID-19. No other country will be able to do that this fast, but other countries have done quite a bit also to improve the ICU equipment, for example, using the military in some cases, or in other cases, just by postponing elective procedures and using the emergency rooms also for ICU. Then beware of unforeseen side effects. This is particularly important here in Africa. And Alphonse, since I have you also here on the call here, I always think it's really, really important to put things in perspective. So as of yesterday, there were in all of Africa 63,000 cases, which compared to the global numbers are really minimal. Globally, there are over 4 million cases. And there were 2,283 deaths. Every death is terrible, but again, compared to 285,000 approximately globally. If you compare that to malaria alone, 380,000 people die every year of malaria. 380,000 compared to about 280,000 globally so far from COVID-19. And the reason this is so important is that past crises, like for example Ebola, have shown that often the regular procedures stop, malaria prevention and treatment, and therefore you actually have more deaths from malaria than you actually have, in that case, from Ebola. So I hope we won't get to the point that we'll have more deaths from malaria than you have from all of COVID-19, just in terms of the increase because of stopping medical treatment. And then what's of course extremely important is vaccines and treatment globally. I mean, everyone is searching like crazy for a cure or for a vaccine. And to be completely frank, until that is in place, we will not get rid of COVID-19. We can manage it, but we won't be able to get rid of it. Okay, let's go to the next slide. So that was just for the health effects, but then social protection, as I mentioned, especially protecting the most vulnerable, the poor, the informal employees who don't have a social safety net. You'll see a big increase in unemployment. So what you want to do is protecting employment where it's possible, potentially working through financial intermediaries, supporting enterprises, and social protection. So either cash transfers for the poorest, unemployment insurance. And then preparing for the economic restart is extremely important, where, to be frank, every country is still trying to find out how can we best do that. What you want to do, in theory, is easily said. You want to protect the viable companies, and you want to minimize the losses in the others. But how are you going to do that? How can you reopen without restarting the crisis? So this is, as I mentioned earlier, Germany is just trying to do that and has to balance very carefully not to restart the crisis. And we don't know yet really what the effect of the huge fiscal gap is going to be. Let's go to the next slide. What have we learned from international financial institutions? We actually worked together with the Asian development banks to put together very quickly, responding to the Corona crisis, 13 lessons from evaluation of previous crises. So what's really important is ownership and coordination at the highest levels of government. Cooperation is absolutely critical, not just within the country, but also regionally, and then with the specialized technical agencies. So, for example, the WHO. Working rapidly is really important, but you don't want to forget about the quality, and really need to focus on the outcomes. So really helping people sustaining lives and livelihoods. And then what you really need to do is building sustainable and flexible response systems. So regional surveillance, national disaster risk plans, and engaging and training communities. In the African Development Bank, we also put together what we have learned from crisis response budget support and lessons from the Ebola crisis. So, for example, one of them I mentioned already earlier is that sometimes you get other diseases increasing, and that could make it much worse. Another one was that building these capacity and systems is a much longer term effort than we had initially thought. So it's not a matter of months, but of quite a few years. And then World Bank also has lessons from the global economic crisis, which is quite useful. So let's move on to the next slide. In terms of international financial institutions, there were support packages, huge ones, just to give you an example, the IMF alone doubled its support to $100 billion and had also like $1.4 billion in grants for the poorest countries. Alphonse already talked about the World Bank group package that was initially focused mainly on health system. And then the second phase will be more on the economic and social shocks, and IFC on the private sector clients. Asian Development Bank, of course, particularly interesting for you, has a $20 billion package. They initially had 10 billion and then doubled that. And we also have a $10 billion package focused on crisis response budget support to provide financing for governments, allowing them to buy the critical things, in particular to contain the pandemic right now. And then also the social protection against the economic effects. And for our private sector clients, initially debt deferment, liquidity support, trade finance, and guarantees, very much like what Alphonse also described about the IFC package. So let's go to the next slide. For the private sector, and given the audience, I thought I'd say a little bit about financial intermediaries first. You have all learned changing in delivery of services, much more online banking, for example. And my prediction is that this may very well outlast the crisis because people will find it's much more convenient. Then extremely important to work with your clients to assess the short-term and medium-term effects. And many clients, probably almost all of them, will face liquidity problems because they will still need to pay their employees, but they won't get revenues. And what you will really want to do is trying to figure out which ones are going to survive and which ones will not survive, unfortunately, because clearly some of them will that. But what's difficult is finding out which is which. Knowing your clients in this time is particularly important. And then the second thing is having a credible business plan, and the prospects beyond the crisis is important. And then strengthening your balance sheet, stress testing your financials, working with the clients to help minimize the non-performing loans and the losses, and maintaining an adequate liquidity situation is really important. For the real sector companies, if we go to the next slide. Oh, one more thing. There's this joke going around. Who did most for the digital transformation of your company? Was it the CEO, the chief technical officer, or COVID-19? And everyone is saying, well, COVID-19 did really much more. And the reason this is important is that we will see different businesses when they reopen, I think, because we'll have learned a lot of what works well, and what works well, hopefully we're going to replicate also afterwards. So next slide, please. So real sector companies, what you want to do is, first of all, ensuring business continuity, protect your workforce, protect your buildings also to keep them virus-free, stabilize your supply chains, engage with your customers in terms of what do they still need, how can you still work with them, and importantly, work also with your creditors so that you don't just stop paying, but you explain to them the situation, and if you only have a liquidity problem right now. Then explore opportunities with your existing business. Maybe you need to find a different delivery channel, as I mentioned, restaurants with takeout deliveries or so. And new opportunities might actually open up using IT and so on. If you can't do that, continuing with your regular business, think of how you might be able to use your assets differently. So can you produce something that is currently being needed in the crisis? Can you produce medical equipment? Can you produce masks or something like that? If that's also not possible, the first thing is to ensure your short-term survival. That may sometimes mean that you will have to lay off people, minimize the costs, and you want to do that as much as possible, of course, preserving the business and preparing for reopening. And then on the digital transformation, you'll likely see that continue and also go on beyond the crisis. And just like for banks, also strengthening the balance sheet is also important, and maintaining the liquidity. Okay, that's let's go to the next slide. The important thing for all of us is to get ready to rebound, but rebounding in economic activity and not in COVID-19 infections and deaths. And so you will see almost certainly cautious reopenings in most countries, and I'm sure that the Philippines won't be different. So I'll stop here. Happy to take any questions you may have.
Yes, thank you very much, Roland. It was a very good systematic analysis and evaluation of the lessons learned from the pandemic so far. I think it's, you also emphasize that we are one in this, and cooperation is very important. So we proceed to our next speaker. We'll save the questions for later, but just for everybody's information, Hideki from the International Labor Organization is online as well. He will be presenting last. So we move on to JC. We move from Africa to Asia now, and JC, you can take over from here. Thank you.
Thank you very much. Can you hear me, Gay?
Yes, yes.
Okay, thank you. Well, good afternoon, everyone, or good morning to others who are joining from somewhere else. I am JC Parreñas, as Gay has already introduced, and I am based in Tokyo, in Japan. So before I start, let me just brief you very quickly on the situation here in Tokyo. So as of yesterday, there were 15,800 infected in Japan. But I agree with Roland that these types of statistics are not very reliable. So it's probably better to focus on the death number. So there are 621 deaths from COVID as of yesterday in Japan, which is about 0.2% of the global total and 0.002% of the Japanese population. And the trend has been going down. So Japan is doing very well. The state of emergency was declared last April to last until May 6. And then since then, it has been extended to May 31. But the government is now thinking of lifting the state of emergency in some prefectures in Japan where the situation is very, very manageable. The state of emergency does not give authority to local governments to enforce lockdowns, for example, or to impose penalties on people and institutions and establishments that do not comply with the guidelines. And that is because of the very strong protections for civil liberties in Japan's constitution. The state of emergency does give authority to local governments um, to close down public facilities like public concert halls, for example, or museums, and in case of emergency to take over facilities like hospitals if needed, although that has been needed until now. But local governments, as well as the national government, have been issuing guidelines, encouraging companies to allow more people to work from home, encouraging businesses to close down, especially on weekends, and encouraging people to stay at home. In Japan, most of the companies and establishments have been complying with this. Companies are still operating, and so some of us still have to go to work if we need to do essential things in the office or in order to take care of essential operations, for example, in the case of bank tellers. Um, but um, uh, but in general, life has been going on quite normally for most people, except that there are fewer people on the street. There's a lot of social distancing. There's not much congestion in the subways. So Tokyo is still Tokyo, except that it feels like a small provincial town because most of the restaurants are closed. There are no concerts. There are no public gatherings. But I think the things that have been very important for Japan to control the spread of the pandemic are first basic hygiene. So people have been um, practicing this for many years, even before COVID-19. You know that a lot of Japanese wear masks, even during normal times. Also, in terms of healthy lifestyle, to develop immunity and to strengthen the immune system, and that includes healthy food, environment, exercise. And last but not least, it's really the civic responsibility for people as well as businesses to comply with the guidelines for social distancing and to minimize people going out and being in close contact with each other. So that is the situation in Japan. But I think even here there is it is very clear that the pandemic has severely impacted the economy because many businesses are struggling. A lot of people, for example, who work in the services and the entertainment industry, like for example, ballet dancers, they are out of work. So in addition to the thousands of precious lives lost, this region is reeling from the economic shocks that have decimated businesses, destroyed jobs, depressed households and individual incomes and savings, and inflated public and private sector debt. And so in the APEC Business Advisory Council, we are developing our recommendations that we will be giving to the APEC finance ministers as well as to leaders this year. Accelerating recovery is an immediate priority because it urgently needs attention and action by regulators and policymakers, most especially with regard to enabling MSMEs, which are the main providers of jobs and the backbone of the economy, to regain their footing. The pandemic has also rendered economies dangerously vulnerable to new crises, and this has been mentioned before. It could be resurgence of infections, but also any natural or man-made disaster. And with the huge numbers of financially distressed current and potential entrepreneurs and consumers, these are exposed to the risk of a downward spiral toward poverty. And this needs to be addressed by promoting resilience, particularly through facilitating exits from bankruptcy and enabling more entrepreneurs to rejoin the business sector, as well as tapping new sources of risk financing, such as capital markets, to expand insurance against disasters. Now, the ones to suffer most from the consequences of the pandemic are, of course, the economically marginalized and the MSMEs in emerging markets. And this is because their access to finance has become more difficult in the depressed financial environment. The pandemic has triggered a massive movement of global capital away from emerging markets. And this will become more difficult to recapture in the future because investors and lenders are becoming more sensitive to stakeholders' environmental, social, and governance concerns. And we see it in the financial sector, that there's a lot of shareholder pressure to promote more compliance with sustainable development goals among our clients. And that will make it more difficult to funnel more capital, especially to emerging markets that are still in the stage of transition. In addition, the pandemic also showed companies ways to harness digital technology, and that was mentioned already before. Many banks are saying that COVID-19 has been the most influential chief transformation officer. And this is really happening in many companies, including my bank. And as you know, banks are normally very conservative in terms of introducing innovations, but we have been able to introduce a lot of these innovations in the past few weeks in response to COVID-19. But also the pandemic has exposed concerns about employee benefits, supply chain management, and ways for them to support the broader community. And so reshaping the financial services sector is important to make it more inclusive and take advantage of opportunities in digital technology, and to effectively incentivize companies to progressively align their practices with social development goals and ensure that the region is able to continue attracting global capital in the future. So our work in the APEC Business Advisory Council has been focused on how policymakers and regulators can enable the financial sector, especially in emerging markets, to contribute to recovery and reshape itself to make it more inclusive through digitalization and effective in making recovery more sustainable. Could we have the next slide, please? Yes, thank you. So we will be considering ways for policymakers and regulators to enable the financial sector to help in accelerating recovery. And we will be looking at areas, for example, like regulatory actions and policies. And so from the Basel Committee on Banking Supervision, as well as the individual regulators, we are looking at adjustments in capital, liquidity, and prudential standards and regulations that can allow lenders to expand credit to MSMEs, while at the same time ensuring debt sustainability and financial stability. And this includes, for example, the postponement of deadlines for compliance with certain regulations, which would burden banks operationally, so that if these are postponed, then banks can really focus more of their operational capabilities in order to help their clients. Second, we will be developing our recommendations on how to develop well-designed public-private sector emergency credit programs. And there are already a lot of experiences in the past from which we can learn to minimize moral hazard, for example, such as careful structuring uh, of balancing government guarantees and risks to be borne by private sector, or providing government guarantees that can focus on tail risks, and to help identify strategies that are more cost effective over the long run. And that includes, for example, the use of net present value analysis in accounting rules to put guarantees and loan programs on a level playing field based on their net cost over time. And this is important because sometimes, and this is also already from experience, governments tend um, to use guarantees because in the short term, it is less costly, but actually on the long term, if you look at that, it can be more costly than loan programs. So this is really how to make emergency credit programs more efficient and more fiscally responsible. And then we need to uh, re-emphasize the urgency of implementing the reform of insolvency regimes in order to promptly deal with large numbers of bankruptcies and facilitate fresh starts for entrepreneurs. This is actually something that we have been working on with the IFC for about 3 years now. And we have actually developed essential elements of effective insolvency regimes, which provide some guidance on what are the kinds of elements should be incorporated in the legal frameworks in order to accelerate the exit of failed entrepreneurs, especially those who fail in their first attempt, so that they can rejoin the economy, and we can have a more dynamic entrepreneurial base. And also, we need to develop the market for insurance-linked securities because the insurance and reinsurance sectors are being hit very strongly by COVID-19. And so we need to develop, especially for emerging markets, the access to capital markets in order to provide insurance cover for natural disasters, and also including pandemic bonds. So we also have recommended this in the past. It has been endorsed by finance ministers, but it needs to be implemented. And we need to get um, the finance ministries and other stakeholders in emerging markets to work with the World Bank and ADB in starting that, catalyzing the development of that market. Just as the Latin Americans have done that through the Pacific Alliance catastrophe bond that was successfully issued 2 years ago. Could you move to the next slide? Okay, this is my last slide. We will be discussing how to enable the reshaping of financial services in order to make it more relevant and effective in alleviating the impact of the pandemic on the economically marginalized as well as MSMEs and in emerging markets. And we're looking particularly at inclusive digitalization and in promoting companies' alignment with social development goals to continue attracting investment. So we're considering the following. The first is accelerating inclusive digitalization of financial services. And this is very important, especially for those who are economically marginalized at the bottom of the pyramid. We're talking about the informal sector, rural populations, subsistent farmers. According to the World Bank statistics, a couple of years ago, we have about 500 million people in the APEC region who do not have bank accounts and who are not served by the financial sector. So how to develop, how to harness financial innovation in order to, to provide access to finance to these population groups. This has been, there have been successful examples in the past, in Indonesia, for example, but the issue is how do we scale this up in order to make it happen across the region. And also, we need to develop uh, or to expand access to finance through such um, means as inclusive open banking, especially in emerging markets, and also in promoting the adoption of regulatory technology to lower costs, speed up process, and develop an inclusive digital KYC. Because as you know, KYC is one of the most important issues that stand in the way of further expanding financial services to a lot of MSMEs and consumers. And then lastly, we are working on recommendations on how regulators and governments can enable investors and lenders to effectively use ESG finance. So the environment, social, and governance factors in finance in order to promote the alignment of company practices in the region with sustainable development goals. And this is important to ensure that the region will be able to attract financing in the future through the development of high-level guidance for policymakers and regulators. So there are several areas where there is need for high-level guidance. First, on reporting and disclosure. Second is on prudential regulation. Third, market standards, for example, for green bonds. Fourth is taxonomy. And the fifth is international collaboration. And this latter is very important because there's a lot of fragmentation in the region in terms of, for example, developing taxonomy. So China has developed its own, Malaysia has developed its own, which is similar to Europe. And then the other jurisdictions are developing their own. But, if we have a fragmented standards for ESG financing, that it will be very difficult for financial institutions to use ESG finance in order to provide incentives to companies in the region to align their company practices with SDGs. And we will be developing recommendations on how APEC can provide a platform to reduce fragmentation and to develop common approaches and to shape global ESG standards and frameworks so that these are applicable not just to regions like Europe and advanced markets, but also applicable to emerging Asian economies, which are in a state of transition. So that's the work that we have right now. And over the next few weeks and months, we are organizing several video conferences with various experts in different fields and in the industry, multilateral organizations, academe, in order to sharpen our recommendations, and then hopefully we can submit them to finance ministers and leaders for endorsement and implementation. So that's it for me, and I welcome any comments and questions from all the participants. Thank you so much.
Thank you very much, JC. I think what's clear at this point, may it be from Africa, from Asia, the trends, the observations, the lessons, there are common denominators. Definitely, this can possibly, the pandemic situation can lead to more financial exclusion rather than financial inclusion. Digital technology, it was fast-tracked not by the CTO or CFO or CEO, but rather by NCOV itself. And again, the most important thing, the importance of cooperation, not just among the multilaterals, but also between the public and private sector. Now we go deeper to Asia, bring you to Thailand. We'll have Kobsak present at this point. Kobsak, please take over.
Good morning, everyone. Thank you, Gay. First of all, I would like to thank the Financial Executive Institute of the Philippines, or FINEX, and Gay Santos and the organizer for inviting me to speak to you this morning and to share information about the aids and efforts in Thailand. I would like to divide the stage into two stages. One is the during the COVID-19 stage, and second is the post-COVID-19 stage. My discussion today will be more related to the during the COVID-19 stage. The topics today include overview of the Thai Banker Association, situation on COVID-19 in Thailand, BCM or Business Continuity Management of the banking in Thailand, relief measures and supports, details of the support of individuals and SMEs and corporates. Next, please. Thai Banker Association, or TBA, was founded in 1958, and we are representing commercial banks incorporated in Thailand. We have played an active role in representing the banking community in discussing with the Central Bank, Finance Ministry, and other ministry in formulating and implementing key economic financial policies and discussing issues related to banks. TBA is one of the key organizations in the private sector in Thailand, together with the Thai Chamber of Commerce and the Federation of Thai Industry. The situation of COVID-19 pandemic in Thailand as of May 8, 2020, the total case was 3,000, total recovery 2,784, total active case 161, total date of 55. And yesterday we have only 6 new affected cases. Thailand has reported new cases of less than 10 cases for the past 10 days. This should be a good evidence of effective control and measures that we have been implemented in Thailand, which include the public awareness and get the good cooperation from public. Using both emergency decrees and Communicable Disease Act, limit infection from outside of the country by resident or incoming commercial flight, and 14 days quarantine of all incoming travelers. Contain and limit infection within the country through the social distancing, work from home, wearing masks, limited traveling across the provinces, 14-day quarantine in some of the provinces, curfew between 10 p.m. to 4 a.m. in the morning, which is still in place, no gathering, closing places, and then gradually opening the business and places. Action in banking community in responding to the COVID-19 pandemic and to the government and orders and measures include establish the Business Continuity Management Group led by the Thai Banker Association with the strong support and close cooperation with the Bank of Thailand. Establish several working groups to tackle critical and important areas in the banking such as cash, digital payment infrastructure and network, treasury and remittance, logistics, especially for cash and critical staff, branch operation and communication. The purpose of BCM are as shown in these slides, which include the support of government orders and instructions, protect bank staff and customers from COVID-19, ensure that cash at the branch and ATM are available and enough for demand of the people in the community, ensure that all the critical function and services can be performed without any disruption, despite of the lockdown, traveling restriction, and curfew, to ensure that all digital payments and remittance can be done without any disruption, to ensure that we have a good and timely communication with public and government. Next, please. This shows that the banks in Thailand have adopted social distancing at their offices and branches. Measures to control the spread of the COVID-19 in Thailand. First is we announced the nationwide emergency decree, which has given lots of power to the government. It was first ended on April 30th. However, this has been extended to May 31st. Establishing the government command center with the Prime Minister as a chair, restricted all incoming commercial flight until May 31st, postponing our major long holiday in April, the Songkran festival, no domestic flight or provincial buses, close all places with high risk, big gathering places such as bar, nightclub, gyms, sport arenas, barbers, hairdressers, massage parlors, and spas, parks, shopping malls. And we have a curfew from 10 p.m. to 4 a.m. in the morning. And we ban all the selling of beers and liquor until April 30th. However, in 5 provinces, they extended to May 31st. In my earlier slide, there are totally 77 provinces in Thailand, including and plus Bangkok. 9 provinces has had no cases at all from the beginning. 43 cases with no cases in the past 28 days. 25 provinces are still the case within the 28 days. With only 1 digit of new affected cases for more than 10 days, and a greater number of provinces with no case and no new cases for the past 28 days, the government has started relaxing controls and restrictions from May 3rd. Some activities and businesses have been allowed. However, they must adopt strict controls on screening, no large gathering, wearing masks, hand sanitization, and social distancing. With continued low number of the new infected cases, we expect that the more relaxing will be allowed on May 17. In addition, the government is also working in adopting apps and QR for checking in and checking out of the places, and for tracing and tracking in case they have identified persons with COVID-19. I think important thing is that we have to make sure that there will be no second round of the widespread in the country, because from the experience and in other countries, it seems that it will be more severe than the first time. And as you are aware that the vaccine is likely to be coming in middle of next year, and people with no symptom can also spread out the sickness to others. So we have to be adopting the hygiene and health control strictly for the next few months. Regarding the support, I would like to divide the support and aids into 3 major groups: individuals, SMEs, and corporates. This is the support that has been done jointly both by the government and the private sector, especially banks. The support and aids to the individual, including the 5,000 baht or about $160 US for 3 months for affected person, reducing utility charge for both electricity and water for 3 months, free internet fee for 3 months, soft loan or debt moratorium from the government bank, lower interest rates on the minimum lending rate and minimum retail rate. Banks have postponed principal repayment on mortgage loans and hire purchase or leasing for up to 12 months. Reducing ceiling rate of both personal loan and credit card loans, and allowing some of the loans on the credit card to be converted to the term loans, which with lower interest rate. Next is a support and aids to the SMEs, which are in three areas. One is the funding and cost of funds. The major program is the Thai baht 500 billion soft loan, or about 15 billion US dollars from the Bank of Thailand for existing customers of commercial banks with the loan outstanding as at December 31st, 2019. The amount of soft loans would be up to 20% of the loan outstanding with an interest rate of 2% for up to 2 years. And a debt moratorium of principal and interest for SME with the sales of not more than 100 million for 6 months, up to 6 months. And the next is the 55 billion Thai baht loan from the government saving bank to the customers of commercial bank. This would carry the interest of 2% and term of up to 2 years. And next is the increase of loss sharing ratio of the SME Credit Guarantee Corporation for SME loan portfolio of commercial banks from 30% to 40%. Last is the program of the Office of SME Promotion, which is a government body. First is the short-term working capital loan to the existing customers of financial institution with the credit record operate through the SME support program with a total amount of about 5 billion Thai baht, is about 156 million US dollars. And to increase the liquidity for micro SMEs that are unable to access to funding source with no credit record, operating through the SME development funds with a total facility of about 730 million baht, or about 22.8 billion US dollars. Two is reducing costs. The government agreed to reducing the utility bills for both electricity and water, and reducing the contribution to the social security funds and by employers and employees. And the government agency reducing the rental fee for the state properties for at least 50% for a period up to 6 months. Next is to maintain employment. One is to subsidize wage in the tourism business for up to 6 months, but not over 100,000 baht per month for SMEs that are registered as tourist persons. And second is the subsidized and allowance for skill development of 300 baht per day for not more than 45 days per person of worker who lose their employment or temporarily suspended employment. Last are the support to the corporates. This including the lower utility charge, reducing contribution to social security funds, increasing allowance for taxable expenses for those related to COVID-19 expense, supporting capital market by establishing the corporate bond stabilization funds to provide bridge financing for up to 400 billion Thai baht to high quality firms with bond maturity during 2020 and 2021. For the post-COVID-19 stage, there are a lot of things to be done to bring back the consumption, businesses, employment, economy, and wealth of both people and the country, while we will still have to observe strict measures on the health and hygiene to prevent the second round of the widespread again. The post-COVID-19, there are a lot of things to be done. A lot of things will not be back to where they used to be before the COVID-19 pandemic, but they will be to where we call the new normal, new lifestyle. More transactions will be done through the digital platform and digital connectivity. We expect less cash and more online and digital payment transaction. However, it would take different length of time, especially to some sectors, to be back to acceptable level after post-COVID-19 again. Therefore, this will pose threats and new opportunities. The Thai government has been working on collecting ideas and recommendations from both public and private sector and formulating plans for economic and social for post-COVID-19 and establishing several committees and working groups. Private sectors in Thailand has also been getting together to help business, SMEs, and community to cope with it and to join with the new normal and more digital platforms and connectivity. The 400 billion Thai baht funds has been allocated by the government for the post-COVID-19. In addition, I believe that it is important that regional cooperation is important. Government and private sectors must work together within the countries and with other countries in the region and to share knowledge and experience and best practices. That's in my presentation. Thank you very much.
Thank you very much, Kobsak. Indeed, another iteration or emphasis on the importance of cooperation, regional cooperation, public-private sector collaboration. I think what struck me from your presentation in terms of SME intervention or assistance to individuals is the reducing and waiving of utility charges. And in the Philippines, I think we're among the highest in terms of electricity charges. So I think that will be very useful for MSMEs as well as the other citizens in the Philippines. That being said, last but not the least, let us move forward with Hideki. Hideki will touch on a very critical aspect of this pandemic, which is a focus on labor. Hideki, please go ahead.
Hello.
Yes, go ahead, Hideki.
Okay. Can I actually share my presentation from my end?
Okay, Alex, can you kindly unshare your screen so Hideki can share his screen, if that's okay? Go ahead, Hideki.
Thank you. So share screen. This one. Okay, hope you got the full screen. Okay, thank you guys for introduction, and thank you FINEX for kindly inviting me for this international forum. I know I'm particularly for those in the Philippines, I'm standing before your lunch, but do not worry because I'm also standing before my lunch, so I'm incentivized to go fast. I understand it's the 10 minutes that I have to speak, so I start my stopwatch. Okay. Yes, this is an exciting topic of the new normal. But before beginning, I need to begin with my disclaimer. I'm going to touch upon the bridge between the public health intervention and the world of work. So please don't believe me, whatever I say about public health intervention. I'm not the medical doctor, I'm not public health expert. Actually, my presentation is an excerpt from the WHO ILO meeting scheduled for this afternoon, because the same topic, the safe return to work, is an interest of WHO Philippines, World Bank Philippines. So I have been preparing for that. And then it happens that this FINEX online forum comes in the interesting juncture. On the ILO side, although I have been in discussion with ILO global and regional team, but this is an evolving thinking. So please don't take this as an ILO's official position or views. Anything expressed is my own view, which I am discussing with the ILO team. That's why I put on the title, points for discussion. Well, anyway, I think we all know that this is an uncharted territory and we need to explore. Okay. So yes, the COVID-19 is a new disease and we are still learning about how it spreads and the severity of illness it causes. So even on the public health side, we are still learning. We know that the job impact on the COVID-19 pandemic is unprecedented, because I need to focus more on time and the critical issues. So I'm not going in details of those lost employment, but just worth saying that nearly half of the global workforce is at risk of losing livelihood, and 1.6 billion informal economy workers are threatened. But the next point is an important element. After 2009 pandemic influenza, we have learned to live with the seasonal influenza, which actually kills more people than the COVID-19 pandemic at this moment, although COVID pandemic is likely to surpass the numbers soon. And it's because we have the vaccine. So the expectation, it's not a scientific fact, but expectation is that normal life may resume within 1 to 2 years when the vaccine or effective therapies are deployed. Once again, this is nothing that I'm bouncing with the WHO team as well as ILO's occupational safety and health team. But this is, please take it as more of a question raising rather than the final conclusion. So the question, whether this time is different. For the past epidemics like SARS, Ebola, and the 2009 influenza pandemic, the ILO, often in collaboration with WHO, produced workplace safety and health, or WASH in short, WASH advices. And well, many things would apply, but everyone is curious about how about these COVID-19 specific elements, such as transmission by asymptomatic and pre-symptomatic carriers, prolonged virus emission up to 3-4 weeks, false negative test result, which is more than a ignorable level, and different strains of virus that we seems to be noticing. This graph tells that actually the most infection is happening from those people before showing the symptom rather than those people who have the symptom. So this is a big challenge when it comes to preventing the infection. Okay, so UN has a 5-pillar framework which puts health first. So what would it mean in terms of the critical indicators of the new normal? I think also things are still evolving. We still need to learn. I understand that flattening the curve, many policymakers have learned more or less the international good practices. But the question is, after flattening the curve, what can we do? We need to avoid the second surge of the infection, but we need to bring back jobs. This is the uncharted territory, and I hope that I could make some contribution to build a new integrated approach to this uncharted territory. I think I don't need to go into this, that the previous speaker already talked about the basic reproduction number being an important indicator. If we can maintain the R below 1, which means that we can stop the exponential growth of the pandemic, but the growth become flat. So once the curve is flattened, as far as R is kept below, then we are okay. This is a graph for Austria. They have started easing after Easter when the reproduction number is way below 1. And then as of now, it is maintained at 0.81. So Austria is doing well, they also published the area-wise fluctuation of the R. So this can indicate that for some places it's quite okay, but like the capital city of Wien, the number is coming very close to 1. So they may have to pay more attention. Actually, that will be the similar challenge for many of the big cities here in Manila, as well as mega cities across Asia. The big challenge, how to control all in those mega cities. Philippines actually have a very good dashboard. This is from the University of Philippines, and since mid-April, the AL for Philippines, this is an effective reproduction number, ALT, has been fluctuating around 1.0. That is one reason why the opening up, lifting of the lockdown of Metro Manila is still being debated every day. Philippines, well, the University of Philippines team also have published analysis of province-based R figure. Well, we hope that this will eventually become daily traceable graph like Australian one. Then it will become more helpful for policymakers to decide. There are other critical indicators. I think the previous speakers touched upon this, but in the Philippines, they are apparently they have been paying attention to case doubling time and critical care utilization rate to decide the province-based lifting of the lockdown. Or here it's called enhanced community quarantine, and the new normal is called general community quarantine, GCQ. While Germany, Korea, Osaka, Japan have different criteria. For the sake of time and for the sake of discussion, I will not get into details, but we can discuss further on this. Okay, so now this is how we see how I try to understand the uncharted territory after flattening the curve. So government of the Philippines, as well as many governments across the globe, has been trying to enhance the healthcare capacity, and this effort will continue. So good that the ceiling under which we need to contain the waves of number of infections will keep going up. Then also during the lockdown time, many governments have invested a lot to strengthen the surveillance capacity, the testing capacity, the contact tracing, the digital apps to support the contact tracing. Okay, and now we are putting that as the third pillar, workplace occupational safety and health, OSH practice. Because the strengthened surveillance will enable the early detection of the new surge of the number of cases, and then help the government, help the public health authority to intervene to suppress the curve below the healthcare capacity, while workplace OSH practice will continuously pull down the curve downwards. I have highlighted in blue squares several points that we need to consider. Many have already put in place the generic guidelines of workplace safety or prevention and control measures. We would expect that many would move for sector guidelines, and then ILO is considering to support on that effort. But the question, there are several remaining questions. How to make these safe workplace practice actually work, particularly for micro, small, medium enterprises or MSMEs, which have limited knowledge and capacity and funding. On the other hand, in the middle, you see SP and rules. SP stands for social protection. Social protection rules to ensure open and transparent reporting. We've heard about some troubles of super spreader. I didn't touch upon, but in the earlier slides of criteria to lifting the lockdown for Korea and Osaka, Japan, there are one indicator that looks into the percentage of traceable versus non-traceable patients. And non-traceable patients, or worse, hiding, may happen if and when the business sees the reporting, honest reporting that one of their employees is infected or showing symptom because of the fear of shutting down without compensation. Or the employees themselves, with the fear of getting fired or not receiving any compensation or unpaid 14 days quarantine, then of course those living on the daily wage would not want to disclose honestly. So while many are enforcing the rules and then trying to supervise, but it's also important to incentivize the workers and employers with the right social protection measures so that they won't be threatened by the honest reporting. There are many issues. I'm not touching upon each and every issues included here because I already spoke for 14 minutes. I'm not going in detail for the remaining slides anyway, but this shows an importance of linking the three pillars with the epidemiological database as well as international good practice of epidemiological learnings. I would also like to add that the ILO would be interested to collect the international good practices of workplace OSH. But we need to learn so that these information will provide new evidences of infection and prevention or the patterns of infection and prevention so that we can be more specific about risks in the workplaces. We should be better informed about sector or occupation-wise risk feedback because there are divided views. Should we reopen restaurants and cafes? Should we reopen barbers and hair salons? Should we reopen massage and other personal care services? Should we open gym and fitness clubs? It seems that the different government guidelines are pretty much divided on these issues, but we need to be informed with the scientific evidence that which can be reopened relatively safely and what are the particular risks they have to keep in mind in a constant manner. Okay. Well, I have spoken 15 minutes. I just want to say that the ILO has many resources which is already adjusted for the COVID-19 context. We have a lot more resources from the past pandemics and other issues to support. We have this 4-pillar strategic policy framework focusing on a stimulus package, the supporting enterprises and jobs, protecting workers, and the social dialogue. We have MSME-specific workplace productivity programs, which can be tapped to address the safe workplace issues. Well, MSMEs can turn on very low-cost social distancing measures without investing huge amount, which is anyway very difficult for them to do. We know that the participatory workplace dialogue through the Occupational Safety and the Health Committee established in the workplace has been very effective in realizing the workplace OSH. There are many issues to better protect workers from social protection point of view. but we know that there are issues of domestic violence, violence against children, the plight of migrant workers. These needs to be addressed by bringing them back to work and not confined in the work or repatriated. And we are seeing that many leaders are talking about safe return to work can be a best stimulus. Right? Once the bills is pretty much under control, then those countries may expect more foreign direct investment to come. There are countries which are contemplating reopening the border between those countries which have successfully squashed the pandemic, such as Australia and New Zealand, and then Australia is exploring with the same thing with Germany. Of course, it's not as easy as what it may look like, but that's some hope. I shall skip all these anyway. This presentation shall be shared with everyone for further review and discussion. But we believe that we can help turn the new normal into a better normal for MSMEs rather than leaving them behind. Thank you very much.
Thank you very much, Hideki. So we're down for a few minutes before we close, but I want to start with a question. Is Roland still there? Roland, my question for you, or the question from the audience, resources are kind of constrained. How do we ensure as a multilateral, you're able to have resources for everything that needs to be prioritized? I think this is especially true for Africa. Africa is faced with a lot of challenges with the oil industry associated challenges, as well as other pandemics going on there. So the question is, how do we ensure enough resources to address all these priorities? Go ahead, Roland.
Thank you, Gay. For example, this is usually where the IMF comes in big time. The IMF has recently approved a $3.4 billion package for Nigeria to help them, because as you say correctly, the oil exporters are hit most and other commodity exporters. I also saw that there was a question there in the chat, how IFIs actually make sure that the funding really benefits the COVID-19 preparation. So, for example, as part of the IMF package, they insisted on having external auditing of all of the expenditures and procurement related to COVID-19. So that's one of the measures by which IFIs actually do that. But we'll have to see, it depends a little bit on how long the crisis will last. So if we have what's called a V-shaped recovery, then it wouldn't be so bad. If it's long drawn out, then all of the money of the IFI is probably not going to be enough.
Yes, thank you very much, Roland. I know I have to let you go, but I want to give you the opportunity to say some closing words for our audience before you signed off. It's already like really past 3 o'clock, I think 4 o'clock in Roland's time zone. So we don't want to take so much of your sleep, but any closing words for the Filipino community and our international colleagues?
I think as some of the other speakers have already managed, the COVID-19 is best managed if we all work together and protect each other's. And as I said, particularly older people are very vulnerable, and the more we can actually work together, be responsible ourselves, the better it can work. And then particularly for businesses, I think it was very interesting to hear there how responsibility is also really important for businesses. Only if you treat your employees well, and so, for example, give them sick leave and so on, will they actually be willing to admit that they might be affected, and so on. And so it's actually in our best interest to show that social responsibility, be it as citizens or as entrepreneurs. And finally, I just wanted to say many thanks for FINEX for the invitation. It was very interesting. And I also learned a lot from the other presenters, so much appreciated. Thank you.
Thank you very much, Roland. It's so good to see you. Keep well, my friend, and God bless.
Likewise.
Let you go.
Take care.
Bye. Thank you. So we are actually, it's already a little past 1 minute past 1. Maybe we can, I think the best way to approach this is some of your questions will be addressed by email by our panelists. So I just want to give every person in the panel the opportunity to come up with some closing or parting messages to the audience. Can we start with Kobsak, please?
Thank you. I think this COVID-19, we are aware that it's impacting every country, and especially on the SMEs sector. And with this, I think every country has to work together. And as Jesse mentioned, there's a lot of things that has to be done to help the SMEs and all people who would be able to access to finance. So I think we have to work together on a lot of things to in the future. And one thing is that definitely that the SME, the COVID-19 will not go away very fast. So we have to be observing the hygiene and the health care of the people. So that's the area that to be done. In Thailand, we are doing digital solution. SMEs and agriculture are the main focus that we are doing right now, and make sure that in Thailand we have the more self-sufficient, especially in terms of medical supply. So that's what we are doing in Thailand. So I would like to emphasize on the regional cooperation and working together. Thank you.
Thank you very much, Kobsak. Again, as always, thank you for all your support in the Philippines. I know you've been a very strong supporter of the Philippine credit infrastructure undertaking. Appreciate it. Now let's proceed with JC. JC, any closing remarks for our audience? JC, you're on mute.
Okay, is it okay now? Can you hear me, Gay?
Yes, I can hear you.
Okay, thank you very much. I think the only thing I can say is I would like to reiterate that it's important to, really develop social responsibility, civic responsibility on the part of people, because this is really one of the elements of the first line of defense. The government can, do a lot of things, but I think, in order for the economy to keep on going, it's very important for businesses to continue responsibly operating, and also for people to be able to do their work. And also, I think one other thing is, of course, we probably have learned a lot from this experience in terms of the importance of personal hygiene, hygienic practices, as well as really healthy lifestyle in order to have very strong immune systems, which is important not just for COVID but for everything else in our life. And then the second thing I wanted to say is that we now have to start thinking about how do we recover, how do we promote the recovery from this situation, but doing this in a way that is financially and fiscally sustainable, as well as efficient. And we need to also look at what regulators and governments can do in order to enable the financial services sector to be able to help their customers in this particularly difficult time. So with that, let me just end my remarks.
Thank you very much, JC. I truly hope, because I know every government is struggling to resolve this on their own, have a series of meetings with their advisors, but I truly hope the international community, especially through APEC, will continue that collaboration and sharing of lessons of experience through your forums. I hope it's continuing. I hope the dialogue is continuing. Again, thank you, JC, for always being there to support the Philippines and the credit infrastructure reforms in the Philippines. Now, last but not the least, again, let's have Hideki. Again, your area is very important. The labor challenge, retention, keeping the economic activity going. Can you impart to us some lessons or closing remarks for the audience to take away?
Thank you, Gail. Thank you also once again for FINEX Secretariat team for organizing this. This has been also a learning event for me. I was just attending another web conference before joining this one. It was a discussion with the Employers Confederation of the Philippines. So I'd like to share 3 points we are discussing with the employers and contemplating. The first is that we are supporting the responsible supply chain practices, and we noted that in the Philippines, many supply chain lead firms have really reached out to address the challenges of the pandemic. But we feel that now we would want to further discuss with them to address the constraints faced by these small farmers, small suppliers, small transporters, small retailers. They are all suffering because of the different kinds of constraints. So that's one. We also noted that this Employers Confederation of the Philippines have been receiving lots of interest and inquiries from their subnational chapters about their need of help for getting their businesses online and be part of the digital payment services. The delivery services have proliferated during the lockdown period, but obviously there are many MSMEs who cannot not yet join the bandwagon. So there are still a big digital divide. My third point is on the microfinance side. The digital divide here is even more challenging because the traditional microfinance business model cannot keep operating under the pandemic. The clients don't want to come for regular group meeting. Clients don't want to touch the cash. So there is a pressure coming from the market for the microfinance institutions to transform their business model into the digital and mobile enabled one. We are working with some of them, combining with what are the good mix of risk mitigation financial services, which is digital. We also note that while digital financial service brought us lots of dream and expectation, when it comes to outreach to SMEs and small farmers and fisherfolk, except for the success of Chinese digital platformers or their banks reaching out to a good number of SMEs and farmers, globally, many are still struggling to penetrate into this difficult market. So there are still a lot of horizon that we need to address in conjunction with this COVID-19 response. I'm very much encouraged with the ongoing policy debate and development in the Philippines. The government has been fast and proactive. Our social partners, employers and workers have reached out to their members, giving exemption for membership dues, informal economy associations are reaching out to informal sector, and already some of them are producing masks and PPEs. So it's really whole of the society responding to the COVID-19, and we hope that we could also be part of these efforts together. Thank you.
Thank you very much, Hideki. I'm sure we are all grateful here for your presence in the Philippines and being on the ground here in the Philippines, helping us sort out the MSME issues as well as the labor issues. That being said, unfortunately, this forum has come to an end. But before we end this forum, I want to thank my colleagues and friends in the international community. Very grateful, JC, Kobsak, Hideki, especially to Alphonse and Roland, not because they're my favorite, just because it's a very challenging time zone for them to connect. Always grateful. Also grateful to FINEX and our president, Jen Pascual, as well as the FINEX Secretariat, our Executive Director, Michael Binluan, of course, the Women and Finance, Malu, Terry. That being said, I want to pass on to Ayen, who will provide you with some closing remarks. Thank you.
Hello, everyone. A very good afternoon to all of you. Thank you for participating in this webinar. I think all our speakers have given us a greater awareness of what is happening around the world in terms of the different intervention groups and their activities. And it's very, very clear that a lot is already being done on a basis. Concerted efforts are being exerted on a multi-sectoral level. And it's very important also for all these sectors to really prioritize the efforts, because we are also dealing with limited resources. And we also have to be mindful of some of the unforeseen side effects that may be coming out of all these efforts that we are putting together. But it's very important, as has been discussed by all our speakers, that accelerating the recovery is foremost in the minds of all our policymakers. And this would also mean that the financial services industry will have to be reshaped and transformed. We'll have to go into more inclusive type of industry that will be digitally and mobile enabled, so that we can also attract more capital and bring forth the recovery among the vulnerable sectors of our economy, which is most importantly the MSMEs. So as GC has mentioned earlier, I just want to quote him when he said that the COVID-19 is probably the most influential chief transformation officer that we have right now in these times. And so we will also have to look at the opportunities that are available during this pandemic in financial services, where we are all involved. It is important that there is no disruption in the services, and that this is a key enabler to all the initiatives that we will have to do moving forward. And on the labor front, very important also that we see the risks that are happening at the workplace, and that social protection is very important for all workers. Hideki-san has given us very good perspectives on some international global practices. And as he said, probably a safe return to work arrangement will be the best stimulus. So in all of this, what is also coming out is that cooperation among all sectors, be it at the local and the national level, up to the regional and international levels, is very, very important. And with that, we will be able to really weather the crisis and bring our economies back to recovery. So on that, in behalf of the Financial Inclusion and the Women in Finance Committees of FINEX, We would like to thank all our speakers for your valuable insights. Thank you also for all our participants for your time in listening to this webinar. And for those who have made donations, they are very much appreciated. And for those who are still thinking of putting in your donations, these are going to be for a very good cause. So please do so. And we would hope that we will see you again in our future offerings. So thanks again to everyone, and have a good day.
One final word reminder to please do join us for 2 upcoming activities this week. One is a webinar on averting a crisis in public transportation and mobility on Thursday, May 14, from 2 to 3:30, and the FINEX GMM with no less than Secretary Carl Chua as guest speaker, and this will be on Friday, May 15. So thank you all, and we hope to see you in our upcoming activities.